Silicon Valley is burning through its workforce at a pace not seen in 20 years, trading human labor for automated futures. The global technology industry is currently experiencing a brutal wave of tech layoffs, with 63,000 workers losing their jobs in June of 2026 alone. This drastic shift, led by industry heavyweights like Oracle and Microsoft, has pushed the sector redundancy rate to its highest level in 2 decades. The information sector layoff rate jumped by 0.7 percentage points to reach 2.3% in June. This figure has more than doubled since November of 2025, reaching levels that surpass the bleakest days of the 2008 financial crisis. This is not just another standard economic downturn affecting Silicon Valley. The biggest players in the market are actively restructuring their organizational charts to make room for automated systems. The scale of this contraction is unprecedented in the modern era, signaling a fundamental change in how tech giants value human capital versus machine efficiency. Oracle led the summer jobs cull by slashing 21,000 positions, which is equivalent to roughly 13% of its global workforce. This massive reduction accounted for a third of the quarter total industry job losses. Microsoft was not far behind, cutting approximately 4,800 roles, or 2.1% of its staff. These cuts are not random. They are strategic maneuvers to fund the massive capital expenditure required for artificial intelligence infrastructure. The companies are essentially trading their current workforce for an automated future, betting that machines will eventually replace the very people who built the systems they now rely on. The sheer volume of these cuts suggests that the transition to AI is no longer a pilot program. It is the core business strategy. The post title captures the sentiment perfectly. Artificial intelligence is destroying jobs faster than it is visibly creating them. Corporate innovation comes at a devastating human cost as Silicon Valley trades its workforce for automated futures. The efficiency gains are real, but the social impact is profound. We are seeing a decoupling of productivity from employment. Companies are becoming leaner and more profitable in the short term, but at the expense of their most experienced engineers and developers. The human cost is not just about lost salaries. It is about the loss of institutional knowledge and the destabilization of entire communities that rely on the tech sector for economic stability. The innovation is happening, but the people who enabled it are being left behind. One commenter pointed out that employee payroll is the largest expense for the majority of companies, so artificial intelligence just has to be slightly cheaper than humans to make financial sense. With AI, you will not have to deal with sick days, benefits, or office space. The math is undeniable for the chief financial officers who are approving these cuts. The initial investment in AI infrastructure is high, but the marginal cost of running a model is near zero. This creates a powerful incentive to replace human labor with machine labor as quickly as possible. The question is no longer if AI will replace jobs, but how fast the market will force companies to make the switch. The economics are driving the layoffs, not just the technology. However, the financial picture is more complex than it appears. None of it is profitable right now. OpenAI and Anthropic lose money on every prompt. It is a facade to treat labor as disposable, but people do not consume AI content on the level they need for it to work. If everyone is fired, who is left to buy the service? One commenter noted that these companies are racking up huge bills. The current model relies on venture capital to sustain the burn rate. Another perspective suggests that we are seeing the capabilities of advanced models filter down to open-weight local models over 2 to 4 years. What OpenAI and Anthropic are losing money on today, you will be able to do on your home computer by the end of the decade. This could disrupt the entire cloud-based AI economy. The tech industry was always encouraging kids to learn to code to drive down wages. It was never about offering opportunity or improving the world. It was always suits frustrated by high-tech salaries, realizing that if they could just get enough people to code, they could suppress the price of labor. Now, AI is the ultimate lever for that suppression. It allows companies to bypass the need for highly paid senior engineers. The bottleneck is shifting. We are seeing no entry-level jobs, bottlenecking mid-level jobs, and middle management will not be needed. The traditional career ladder is being dismantled. The promise of coding as a ticket to the middle class is being rewritten by algorithms that can write code faster and cheaper than any human. What happens when this massive AI race collapses? There is a theory that these companies will get a surprise wake-up call. When the non-profitable AI conglomerates hike the prices for AI use to cash in the 2 to 3 years of unprofitable growth, the market may react. Their idea is that they do not need us anymore. They will pit us against each other over race and politics and watch while we destroy ourselves from the safety of their bunkers. But the ecosystem is fragile. If the cost of AI rises too high, or if the utility does not match the price, the bubble could burst. The future of work is not just about technology. It is about economics, politics, and the resilience of the human workforce. We are watching a historic experiment in real time. The data is clear. Tech layoffs have hit record highs, driven by a strategic pivot to artificial intelligence. Oracle and Microsoft are leading the charge, cutting tens of thousands of jobs to fund their automated futures. The redundancy rate is at a 20-year high, surpassing the financial crisis of 2008. While the economics make sense for shareholders, the human cost is devastating. The promise of AI is still being proven, and the profitability is questionable, but the direction is set. The industry is moving fast and the workforce is being reshaped in real time. We are entering a new era of work, defined by efficiency, automation, and uncertainty. The question is no longer if AI will change the world, it is how we will survive the transition. The tech industry is rewriting itself in real time. We will see if this automated future is sustainable. Stay curious and keep watching the data. Orbit reports signing off.